Right, good morning, everyone. Let's get going here. Sorry about the technical difficulties we've been having lately in the midst of trying to move on to some new software. Okay. Yeah, last night we finally we saw quite a reasonable sell-off. Interesting, every day it seems like lately in U.S. markets. Earlier in the European session, the S&P futures trade down, and they trade down considerably, and then they reverse toward the second half of the U.S. session, or actually kind of almost from the start. You can see there we traded down. At one point we were down 27 points on the S&P early. I thought this thing was about to get killed. The next thing you know, I look back and we're down 5. With a couple hours left in the session, we did sell off again from there. We finished down about 21, if I'm not mistaken. But it was. It looked like we were going to make another one of those days of all-out reversals, and you can see obviously that it didn't happen here, and we kind of failed it toward the end of the session for the first time in actually a while. We had a few things going on. We had minutes from the FOMC saying the Fed's not satisfied with economic preconditions to raising interest rates yet, but they're still basically saying that they're going to have to raise rates soon. So I think September hike fears have diminished quite a bit, but still expecting this year sometime. Then we had CPI, which came in yesterday. This is interesting. I'll show you a chart in a minute on our charts of interest that has to do with that. But essentially, this is the core number. But when you look at the number excluding food and energy, we were up 1.8%. So really, energy has just deflated the hell out of everything. But the thing is, going forward, you can't expect that energy prices are going to be as low as this or lower, probably. So that's actually going to create inflation going forward. So because there's inflation in the rest of the market outside of energy, then that most likely is going to create further inflation going forward. So I actually think that all in all, that this number was, I wouldn't say hot, but it was, it still keeps the Fed, thinking about inflation a little bit. We also had crude oil, which is testing the $40 level. At the moment, we're at 40.5 right now. And we continue to push lower. Yesterday we had another building in crude oil inventories, and obviously, with Iran coming on board and all these kind of things happening right now at once, it's really starting to put some nervousness into the market about the supply situation. So taking out the lows really of multi-year lows, and definitely the lows that were put in earlier this year. You got to watch this accordingly. Energy stocks really bleeding out. Still a lot of high yield debt attached to that in the States, and I think that's one of the nervousness at the moment. If you look at the junk bond market, it continues to come down and make new lows almost on a daily basis with this oil price. Right, moving on into the Asian session, you can see here that Australia was the leader to the downside, down 1.8% after 1.7% after being up 1.5% yesterday. I'm not sure why the market was so strong there yesterday. Really an outlier, only to give it up in completion today. So yeah, there's kind of an interesting way that ended up playing out. But I think that the entire Asian market or Asian session was down across the board. I think that's telling right now as we speak. You can see Hang Seng is down 2.1%, so more than what we're showing here on the screen. And I think it's going to be a tough day to kind of follow up what's happened now in Asia. All right, chart of interest today. We were talking about inflation just a second ago. Here's this is the blue line is all items excluding food, shelter, and energy on the blue line, which is showing that there's very little inflation. The yellow line is shelter, so that's obviously housing costs or rental, and you can see that that's going through the roof. Rental prices have just gone absolutely through the roof in the States, and you can see that that's a big part of what is the inflation story right now in the States. All right, moving on to corporate action. We had Exxaro out this morning, small beat on revenue, and a bit of a miss on headline earnings per share. Then we had Goldfields, which came out more or less in line on headline earnings per share, revenue, maybe a small miss, but I think the market will overall probably be relatively happy with that. You got to remember these guys are pricing in, the chances that these guys can go under. So I think that this is a relatively good result. And we also had Northam, and then we've got Truworths a little bit later around 130. Right, in terms of market data today, we have UK retail sales at 10:30. We've got initial jobless claims at 2:30 in the States, and existing home sales in the States as well. Okay, let's get into some maps. First thing we're going to look at here is the Aussie spot market here. So we're looking at a 2-year chart here. I'm going to just drag this forward. Yeah, so we've had all sorts of things going on here, but I think the bottom line is here. Let's just draw that as best as we can. This bigger picture, head and shoulder, is the one that has prevailed in the end, and it got wishy-washy here. At one point, we looked like we had an inverse head and shoulder going if we took out this right shoulder to the upside, and then we failed it hard. Definitely looking like we're going to come down and test those lows that were put in only a month and a half ago, maybe even a month ago, back in July. That was below 44,000. I don't see any reason why it's not possible that we could get down there today. And one thing I wanted to point out is the target on this head and shoulder is massively lower. We're talking about down around here. We're talking around down below 42,000. So just keep that in mind. If this technical chart plays out, it could get ugly, to say the least. Okay, the next one we're going to look at is Standard Bank is also looking ominous in terms of, technically. We'll back it out a little bit here so you can see the bigger picture. So we got up tested 150 there back in July of last year, pulled back into October all the way down to around 125. And then beginning of this year, we took out 150, and we have not been below 150 on a closing basis since. You can see there, this chart also looking very much head and shoulder-ish. It's got to make you a little bit nervous looking at this pattern. And not saying that it's going to break down here, but we've been bouncing around in this range between 150 and 161. If we take out 150 and really close below it today, I mean, you got to be nervous of this chart. 150 is just such a massive level, so just keep that in mind. Next one we'll look at is Anglo Gold, which Anglo Gold, after all the selling that we've seen, let's just go back and look at a 5-year chart here just so you get the big picture. Bam, this thing's been absolutely decimated. But if we zoom it forward here, you can see that there's a major levels right there, really at about 94 bucks, which was a gap fill into exactly where more or less where we closed yesterday when we traded to that level. We closed at 93.30 if I'm not mistaken. Yeah, so we basically have gap filled here, 94, 95, call it that. We get above there, then we start talking, then we're really breaking above big resistance, and really to me is starting to look like it's going to happen. The 200-day is all the way up here around 113. You got to keep in context the move that this thing has had. It's been relatively small relative to how far it's fallen. So in percentage terms, considering that a lot of these guys may be on the short side, and these guys came out with a really low cash all-in sustaining costs relative to what has been the norm there, I think you've got to really back the fact that this thing can continue to rally. I wouldn't be surprised to see this thing up at 120 bucks in the next couple sessions, just because of, it's got to squeeze the shorts out. You've got a lot of people probably on the wrong side, so just keep that in mind. Going in line with that theme, let's look at Amplats, same sort of story. Obviously, a lot of guys short in the platinum sector. We've seen what's happening in Longman. I don't think there's much to do to save Longman, but some of these other guys, like the Impalas and the Amplats, I really start to expect a big dead cat bounce, in line with these gold shares. And then on the back of that, and I got my face ripped off yesterday trying to play this, was on some of the diversified miners. Seeing these gold shares start to lead and seeing some of these guys get squeezed here on the shorts, and if the same thing starts to happen today in the platinum shares, I cannot expect that it could be very long before you start to see the same things happen in the other sectors. And the reason why I say that is because the shorts will be watching that, and they'll be thinking to themselves, well, shit, we've just seen a freaking 20% bounce here in a couple of days here. I'm scared to death that the same thing's going to happen, with my diversified miners. And I think all you need to see is maybe a quick bounce and even just a solid session out of copper and oil and that sort of thing, and you can start to see the same thing happen in those diversified miners. So just keep that in mind. Look at Amplats here. We get above 300, this thing could be off to the races out of this little downward sloping wedge we got going on here. And the last one I'm going to show is British American. No, sorry, this is not. This is Bright. Bright here, BIT. Sorry, if I had an S on it, in London it's British American Tobacco. Starting to look a little bit head and shoulderish here after yesterday's failure of this same sort of level around 146. I mean, this is not convincing at all. It's not classic at all either. But just have a look here. We dropped below 138. I think this thing can potentially play out down to the 120 level on a drop of 138 and Bright. So just keep that in mind. We did fail off the 146 level. I think the 146 is where you got to watch over the next couple sessions. If it can't get above that, and then if it ends up dropping 138, I think it's worth going with on the short. And that's it for today, guys.